ExamPrep.School. Washington Credit Insurance Exam. There are 6 practice exams in this series. This video covers Practice Exam 1. The first 20 questions are free. In this video, we will be covering the following major categories for Practice Exam 1. Credit insurance, federal laws and regulations, terms and concepts, Washington State Code and regulations. Let's walk through the format. I'll read each question and its choices. Let's get started. Question 1. Which of the following best describes the primary purpose of the Fair Credit Reporting Act as it relates to insurance underwriting? A. To prohibit insurers from using consumer credit information when assessing applications. B. To ensure that consumer credit information used by insurers is fair, accurate, and privacy protected. C. To mandate that insurers provide applicants with free annual copies of their credit reports. D. To restrict insurers from considering criminal background information in underwriting decisions. A countdown circle appears in the top right. Once it completes, the answer is revealed. You can pause at any time if you'd like longer to think. If you'd like additional practice covering more topics, see the description for our book. The correct answer is B. The correct answer is that the Fair Credit Reporting Act regulates the use of consumer credit information in insurance underwriting to ensure such information is fair, accurate, and privacy protected. It does not ban the use of credit data, require insurers to supply free annual reports, or address criminal records. Reason A is not correct. This option is wrong because the Act does not prohibit the use of credit information, but regulates its accuracy and fairness. Reason C is not correct. This option is wrong because while the Act grants consumers free annual credit reports, that requirement addresses general consumer rights and not underwriting specifically. Reason D is not correct. This option is wrong because the Act focuses on consumer credit data, not on criminal background checks. Question 2. Under RCW 48.02. 10. What is the primary stated purpose of the Washington Insurance Commissioner's Office? A. Set maximum allowable premium rates for insurers. B. Mediate individual disputes between policyholders and insurers. C. Provide coverage recommendations to state agencies. D. Protect the public interest by ensuring insurer solvency and fair trade practices. The correct answer is D. The correct answer is to protect the public interest by ensuring insurer solvency and fair trade practices, as RCW 48.02. 10. This explicitly states that the purpose of the title is to safeguard the public and promote stability and fairness in the insurance industry. Reason A is not correct. The statute does not grant authority to set maximum premium rates as its core purpose. Reason B is not correct. Mediation of individual disputes is not a primary regulatory function stated in the statute. Reason C is not correct. Providing coverage recommendations to state agencies is not identified as a statutory purpose. Question 3. RCW 48.02. Joust 20 grants the Washington Insurance Commissioner authority to A. Establish premium rates for the long-term care policies. B. Issue subpoenas and administer oaths in the course of insurance regulatory hearings. C. Negotiate claim settlements on behalf of individual insureds. D. Award punitive damages in civil actions against insurers. The correct answer is B. The correct answer is issuing subpoenas and administering oaths, as RCW 48.02. 20. Explicitly authorizes those powers during regulatory hearings to enforce insurance laws. Reason A is not correct. Rate-setting authority for specific policies is governed by other statutes, not this enforcement provision. Reason C is not correct. The Commissioner does not serve as a negotiator in individual claim settlements. Reason D is not correct. Awarding punitive damages is a judicial function, not an administrative enforcement power. Question 4. Under RCW 48.17.10, which of the following best describes an insurance producer? A. A person who only provides advisory services regarding insurance without negotiating policy terms. B. A person employed by an insurer to adjust and settle claims on behalf of policyholders. C. A person who, for compensation, solicits, negotiates, or sells insurance, or assists in placing coverage on behalf of an insured. D. A person who offers credits or rebates to induce the purchase or renewal of insurance policies. The correct answer is C. The correct answer is any individual who, for compensation, engages in solicitation, negotiation, sale, or placement of insurance coverage on behalf of an insured, as defined in RCW 48.17. 10. Reason A is not correct. Providing only advisory services without negotiating policy terms describes an insurance consultant rather than a producer. Reason B is not correct. Adjusting and settling claims is the role of an adjuster, which is regulated separately from producers. Reason D is not correct. Offering rebates relates to unfair trade practices and does not define the scope of a producer's activities. Question 5. According to RCW 48.17.060, which of the following individuals must obtain a Washington insurance producer license? A. An employee of an insured who receives only a fixed salary and does not negotiate policy terms. B. A public adjuster who evaluates and negotiates claims on behalf of insureds after a loss. C. A consultant who provides risk analysis and recommends insurance programs without handling client applications. D. A person who, for compensation, solicits insurance applications and submits them to insurers. The correct answer is D. Under RCW 48.17.60, any person who, for compensation, solicits applications for insurance and submits them to insurers must be licensed as an insurance producer in Washington. Reason A is not correct. A salaried employee of an insured who does not negotiate policy terms is exempt from licensing under the statute. Reason B is not correct. Public adjusters handle claims adjustment and require a separate adjuster license, not a producer license. Reason C is not correct. Providing risk analysis without submitting applications does not trigger the licensing requirement for producers. Question 6. Which of the following is a statutory eligibility requirement for obtaining a Washington insurance producer license? A. Completion of a pre-licensing education course approved by the insurance director. B. U.S. citizenship verified by a valid passport or birth certificate. C. A minimum of 3 years of experience as an insurance claims adjuster. D. Possession of a bachelor's degree in business administration. The correct answer is A. Washington law requires applicants for an insurance producer license to complete a pre-licensing education course that meets standards set by the insurance director before taking the licensing examination. Reason B is not correct. U.S. citizenship is not a requirement. Residency and background checks are required, but not a passport or citizenship proof. Reason C is not correct. There is no statutory requirement for prior adjuster experience to obtain a producer license. Reason D is not correct. Holding a college degree is not mandated by Washington's insurance licensing statutes. Question 7. Which action must the finance manager take to comply with RCW 48.17? $20 before offering credit disability insurance under a limited lines license? A. Hold a full life insurance producer license and then apply for a limited lines endorsement. B. Complete the required training hours, pass the credit insurance examination, and obtain a limited lines credit insurance license. C. Be employed full-time by the dealership and rely on the insurer's sponsorship without taking an exam. D. Obtain only an insurer appointment since training and testing are not required for limited lines. The correct answer is B. The statute authorizes a limited lines credit insurance license once the candidate completes the prescribed training and passes the exam without needing a full producer license. Reason A is not correct. A full life producer license is not required because the statute provides for a standalone limited lines credit insurance license. Reason C is not correct. RCW 48.17. 72 mandates completion of training and an examination regardless of employment or insurer sponsorship. Reason D is not correct. The statute explicitly requires both training and examination before issuance of a limited lines license, not just an appointment. Question 8. According to WAC 284-17-423, what is the standard renewal period for Washington producer licenses before they must be renewed? A. Every 2 years on the last day of the licensee's birth month. B. Every year on the last day of the licensee's birth month. C. Every 3 years on the anniversary of initial licensure. D. Every 2 years on December 31st, regardless of birth month. The correct answer is A. The correct answer is that Washington producer licenses renew every 2 years, expiring on the licensee's birth month of the second year, as specified in WAC 284-17-423. Reason B is not correct. Annual renewal is incorrect because the regulation specifies a biennial renewal period, not yearly. Reason C is not correct. A 3-year term is incorrect because WAC 284-17-423 mandates a 2-year renewal cycle. Reason D is not correct. Renewal on December 31st is incorrect because renewal aligns with the licensee's birth month, not the calendar year. Question 9, according to WAC 284-17-490, what must a producer whose license expired 120 days ago do to reinstate the license? A. Reapply for a new license by submitting the application, paying the fee, retaking the exam, and completing required continuing education. B. Submit a renewal application with a reinstatement fee and evidence of completing all required continuing education credits within the prescribed timeframe. C. Submit a renewal with the reinstatement fee within 180 days for automatic reinstatement without additional requirements. D. Submit a new producer appointment request with supporting documents and pay a penalty fee within 90 days to reactivate the expired insurance license. The correct answer is A. The correct answer is reapply as a new licensee by submitting an application, paying required fees, retaking the examination, and completing continuing education, which is mandatory for licenses expired beyond 90 days. Reason B is not correct. This applies to licenses expired less than 90 days and does not require a new application or exam. Reason C is not correct. Automatic reinstatement within 180 days without requirements is not allowed under current late renewal rules. Reason D is not correct. Appointment reactivation and penalty fees within 90 days are not the prescribed method for licenses expired beyond 90 days. Question 10. Under ER, CW 48.01. 30. State regulation of insurance is declared to serve all of the following purposes except A. Ensure insurers maintain a legislatively prescribed minimum solvency ratio at all times. B. Encourage the maintenance of adequate and competitive insurance resources at reasonable cost. C. Protect the insurance buying public against inadequate or inequitable practices. D. License and regulate insurers and producers to safeguard the public interest. The correct answer is A. The declaration in RSINW 48.01, IDAX 30 IAS articulates objectives such as protecting the insurance buying public, encouraging healthy competition at reasonable cost, and licensing and regulating insurers and producers. It does not include prescribing a mandatory solvency ratio for insurers. Reason B is not correct. This phrase reflects the statutory goal of maintaining competition and reasonable costs. Reason C is not correct. This is explicitly stated as a primary objective in the statute. Reason D is not correct. Licensing and regulation to safeguard public interest is directly declared in the policy. Question 11. Under RCW 48.30.10, which of the following acts is classified as an unfair method of competition for insurers or producers in Washington? A. Making false or misleading statements about a competitor's financial condition. B. Offering a discount or rebate on insurance premiums to a selected group. C. Transacting insurance policies without securing a policyholder's signed agreement. D. Soliciting insurance business without obtaining proper registration or appointment. The correct answer is A. RCW 48.30 defines unfair methods of competition to include misrepresentation or false statements about a competitor's business or financial condition. Rebate practices and licensing violations are governed under separate statutes. Reason B is not correct. Rebate offers are addressed under anti-rebating provisions, not this unfair competition statute. Reason C is not correct. Failing to secure a signed agreement is a procedural violation under other regulations, not an unfair competition definition. Reason D is not correct. Solicitation without registration relates to licensing requirements, not the unfair competition provisions in RCW 48.30.10. Question 12. A credit insurance producer tells a consumer that Washington state law requires purchase of credit life insurance as a condition of any loan approval and that no loan can close without it. Which practice most clearly constitutes an unfair or deceptive act under Washington regulations on credit insurance advertising? A. Quoting the consumer a separate itemized premium cost on the loan amortization schedule. B. Asserting that state law mandates the purchase of credit life insurance for loan approval. C. Providing the consumer with a full copy of the policy terms at the point of sale. D. Collecting the first premium with the loan advance as disclosed in the sales illustration. The correct answer is B. The correct answer is that asserting a legal requirement to purchase credit life insurance when none exists is a misrepresentation and therefore an unfair or deceptive act under Washington law. Reason A is not correct. Quoting a separate itemized premium cost is a transparent disclosure practice rather than a deceptive act. Reason C is not correct. Providing full policy terms at sale meets disclosure requirements and is not deceptive. Reason D is not correct. Collecting the first premium with the loan advance as disclosed does not misrepresent policy requirements. Question 13. During the sale of credit disability insurance, an agent tells a consumer that disability coverage becomes effective on the first day of disability. Yes, even though the policy specifies a 30-day waiting period. Which practice violates the prohibition on misrepresenting policy terms under RCW 48.30.90? A. Clearly explaining the policy's scheduled waiting period before benefits begin. B. Informing the consumer that any unused premium is refundable upon termination. C. Telling the consumer that disability coverage becomes effective immediately upon the first day of disability. D. Advising the consumer of the right to return the policy within 30 days for a full refund. The correct answer is C. The correct answer is that stating coverage begins immediately misrepresents a material policy term and is specifically prohibited by RCW 48.30.90. Reason A is not correct. Clearly stating the actual waiting period complies with disclosure requirements. Reason B is not correct. Explaining unused premium refunds accurately describes a permissible policy feature. Reason D is not correct. Informing about the right to return the policy for a refund is required rather than deceptive. Question 14. According to RCW 48.18. 60. After a credit insurance policy is issued, a producer is required to deliver the policy to the borrower within how many calendar days following issuance? A. 10 calendar days. B. 20 calendar days. C. 30 calendar days. D. 45 calendar days. The correct answer is C. A time-limited trial allows assessment of benefits versus burdens while involving nephrology specialists and upholding the conservatee's best interest through ongoing review. Reason A is not correct. This interval is too short. The statute allows for a longer delivery period. Reason B is not correct. While closer, this does not match the statutory requirement. Reason D is not correct. This exceeds the maximum period allowed by the statute. Question 15. Under Washington regulations, which explanation must a producer provide to a borrower purchasing credit insurance? A. The producer's commission rate on the policy. B. The procedures for filing commercial claims unrelated to credit insurance. C. The process for obtaining separate life insurance policies. D. The nature of coverage including exclusions, limits, and premium costs. The correct answer is D. Regulations require producers to explain the core features of the credit insurance policy, its coverage scope, any exclusions and limits, and the cost of premiums to ensure informed borrowing decisions. Reason A is not correct. Disclosure of commission rates is not mandated as part of the policy explanation. Reason B is not correct. Procedures for unrelated commercial claims are outside the scope of credit insurance disclosure requirements. Reason C is not correct. Discussion of separate life policies is not a required explanation under credit insurance rules. Question 16. Which ARC-MOW section establishes the statutory authority for maximum producer commission rates on credit life and credit disability insurance? A. RCW 48.17 T79. B. RCW 48.17 Tosbrianen. C. RCW 48.17 near 9. D. RCW 48.2130. The correct answer is C. The correct answer is R. C. 48.17. 90, which specifically caps commission payments on credit life and credit disability insurance. The other sections cover insurer licensing fees, property insurance commissions, or reporting requirements rather than commission limits for credit insurance. Reason A is not correct. That section addresses insurer licensing and renewal fees, not commission authority for credit insurance. Reason B is not correct. This statute governs commission schedules for property and casualty insurance, not credit insurance. Reason D is not correct. The cited section pertains to producer reporting obligations, not the limits on commission rates. Question 17. In insurance, which definition most accurately describes risk? A. The contractual mechanism by which insurers share losses among policyholders. B. The possibility of a monetary gain as well as a loss arising from the same exposure. C. The systematic process of identifying hazards and measuring exposure. D. The uncertainty regarding the occurrence and magnitude of potential financial loss. The correct answer is D. The term refers specifically to the uncertain chance and potential severity of a loss that an insurer may cover, distinguishing it from processes or sharing mechanisms. Reason A is not correct. Describes risk pooling or sharing, which is a method of handling risk rather than its definition. Reason B is not correct. Describes speculative risk rather than the general insurance definition of risk. Reason C is not correct. Defines a risk management activity, not the concept of risk itself. Question 18. Which characteristic distinguishes speculative risk from pure risk in credit insurance? A. Pure risk outcomes involve only loss or no change in financial position. B. Speculative risk includes the possibility of financial gain or profit. C. Speculative risk is more likely to be insurable due to its profit potential. D. Pure risk arises exclusively from credit transactions. The correct answer is B. Speculative risk inherently involves the chance of either a gain or a loss, whereas pure risk allows only for loss or no loss outcome. Reason A is not correct. Accurately describes pure risk but does not distinguish speculative risk. Reason C is not correct. Profit potential typically makes a risk less insurable, not more. Reason D is not correct. Pure risk can arise from many sources, not solely credit transactions. Question 19. A credit insurer considers offering credit insurance on loans to startup companies with unpredictable cash flows and volatile default probabilities. After evaluating options such as charging higher premiums or ceding exposure to a reinsurer, the insurer decides not to insure these loans at all. This decision primarily illustrates which risk management technique? A. Risk retention. B. Risk transfer. C. Risk avoidance. D. Risk reduction. The correct answer is C. The insurer's complete decision to refuse underwriting the exposure exemplifies risk avoidance by eliminating the risk entirely, rather than retaining, transferring, or reducing it. Reason A is not correct. This implies accepting and budgeting for the risk, which is incorrect because the insurer chose not to hold the exposure. Reason B is not correct. This involves shifting risk to another party, but here the insurer eliminated the risk rather than transferring it. Reason D is not correct. Risk reduction seeks to lessen potential impact but does not involve a full refusal to insure the exposure. Question 20. Which of the following elements is required for a risk to be considered insurable under credit insurance regulations? A. Exposure to catastrophic loss events. B. Complex and non-diversifiable risk profile. C. Incalculable frequency of loss. D. Large number of relatively homogeneous exposure units. The correct answer is D. The correct answer is large number of relatively homogeneous exposure units because it allows an insurer to pool similar risks and apply the law of large numbers to predict losses accurately. Reason A is not correct. Exposure to catastrophic loss events is wrong because insurable risk requires losses to be ideally non-catastrophic across multiple exposures. Reason B is not correct. Complex and non-diversifiable risk profile is wrong because such risk cannot be effectively pooled or mitigated by insurers. Reason C is not correct. Incalculable frequency of loss is wrong because insurers need to estimate the likelihood of loss to set appropriate premiums. Enjoyed this practice test? Tap like, hit subscribe, and share it with a classmate. Got a question we should tweak? Comment below, we read them all. Find full practice exam books in the description or at ExamPrep.School.